So let's take a look at oil. How do we start looking at something? So first of all, we're gonna use the top-down approach, where basically we're gonna take a look at a weekly, daily, but usually not weekly, but just for to take a look at the oil properly, we'll see weekly. So first of all, we can see that the price is starting going parabolic. Does it mean it's gonna end where it ended? Maybe not, because in 2007 it also went parabolic to almost buck 50 and then came down just as hard. So for now, we uh, we went up aggressively, but we found some support. And where do we find the support? Well, so we draw the fibs of the last leg up. This is a daily chart now. You can see that this rally started from $60, culminated at double the price at a little over the, but double the price at 126. So why did we stop here? Well, because this price is efficient. You can see it's gradual accumulation. This is unsustainable move. Unsustainable move, inefficient price, usually gets, it's like a gap, usually gets filled. And then price can continue into the direction of the trend. Now, today, uh, this is a very bullish candle, a solid bullish candle closing on the highs. So chances are we can continue higher. The fibs from the 60s low to 126, we found support around 50% retracement, which is, and again, we closed this gap right here. See this gap? Before all this nonsense started, we closed it, and now the price inefficiency is closed, and we can continue a gradual accumulation, kind of like this, with the price moving up sustainably. Uh, so this is daily. Let's drill down further. What's happening? Do you see that if you're gonna use the APEXBULL momentum, you can see that this rally was all bullish, bullish, bullish. We switched to bearish, and looky here, we're about to switch back to bullish. There's also a moving average confirmation. See those crosses here? Uh, Last time it crossed to the bullish side, we got from here, from 90 to 126. Then we got a bearish cross right here, sold off. Now we're getting a bullish cross. So so immediately, this is for me a wave one. I want to wait for a wave two down, an Elliott wave type of scenario. A little bit of a pullback or wave two, and then a blast off. So you want to catch that blast off if the bullish trend continues. As you can see, solid move. You can see that this 120, where was this? This nonsense here, right? And then a solid move down, as you can see by this momentum. And we just switched around 95. Well, earlier today at the open. When was this? This was 2 a.m. So this is Frankfurt traders, and then London traders pumping this up. And you can see you could have just easily bought the momentum switch at 96, and you would have been already in quite a decent profit. Can you chase up here for a long? You can, but your stops need to be here. Maybe a little too much. So 10 points might be a little pricey. So what do you do then? If you want to buy it, you have to go to a shorter and shorter time frame, so 15 minutes. Wait for a 15-minute switchover. So let's take a look at the previous bullish run. In any bullish run, you're going to have the initial wave, a run up. Then you're going to have, at some point, you're going to have a momentum switch from positive to negative and back to positive. So you, even if you sometimes that's not ideal, obviously, but so this here, you could have made money, obviously, because if you entered here, you could have did a 1-to-1 because the stops would be here, or you got stepped out, but then you caught this wave up here, or like I said, you could have bought it here, this wave with the stop here, and never touched it, or this momentum switch here from 90 to 120, whatever it was, yeah, to 110. So 20-point run. In any case, that's the idea. You have to wait for, as you can see, it's already kind of running out of steam because this was a pretty steep rise for one day. No, no, no major pullbacks, no anything. So now it's starting to chop a little. Ideally, you would want to see a momentum switch. You don't have to. Maybe trade a 5-minute then. See, all of this today's move from here was one solid move. So wait for a momentum switch, let it be in the negative for a little while, and then go. Or if you want to day trade it with a tight stop loss, obviously on the 5-minute, you can do that as well. Just buy it now and just put your stop here or here somewhere around below $100, let's say, and see if you can get to 110. Consequently, you can even go further on 1 minute. And this is what I'm talking about. This momentum switch is perfectly illustrated right here. You have a rally. This is 1 minute chart today. This peaked at 3 p.m. and from 3 p.m. it was all people taking profits and basically closing their positions. So you got this pullback right here. So wait for Asia to trade on before start of London and Frankfurt sessions. Wait for a similar situation. It's gonna chop about once you see a solid move up, like a candle right here. In the beginning of the next session, I would look for buys then and enter it in the direction of the trend, which is up for now. Hope it helps. Enjoy.